Hi everyone, my name is piterpakulski. Today we'll continue building financial model of a nail salon from scratch. And today let's build cash flow statement. It is the most important statement where you will be able to see the structure of revenues, expenses. You will be able later to see how much money you need to start this business. So it is a very important table where you will be always looking, searching for example, how much cash is generated by this or that time of the moment of the time in future. Your business partners will be looking at this statement also because they want to see the structure of expenses and many other things. So let's build it today. Let me just start. I will copy the timeline. So I will name it cash flow statement. Cash flow statement. So I will start with the revenues. So this is, by the way, it is almost 100% automized statement. You are not putting data here manually. There are no inputs here except maybe your own funds that you are investing, that you are putting from your pocket to your business idea. But even financing can also be automated. So revenues. So let's do it in a little bit in other ways. So revenues from workplaces. I will do this. Then we are moving to direct expenses. Direct expenses. Then we move to payroll. Payroll will consist of two types of, just a moment, I will hide these some lines. So payroll will consist of payroll inside workplaces, and payroll and additional payroll. So now we are moving to fixed expenses. Fixed expenses, workplaces, and general fixed expenses. Then I will move to fixed expenses, revenue direct payroll, revenue direct fixed investment additional payroll. Now I will move to taxes. I will create a block for cash for taxes here on the top. So taxes, tax, then rate, so here will be revenue tax, payroll tax, then payroll tax, then profit tax, and asset tax, for example. So I will place taxes here. So the revenue tax will be, let me just set up the rates. So these will be the inputs. So I'm marking them with specific color, which goes with all of our inputs. So the revenue tax will be, for example, 4%. Payroll tax will be, for example, 7%. Profit tax will be, for example, 9%. And for asset tax, we will pay, for example, $3,000 monthly. So let it be so. So revenue tax, we take the revenue, multiply the tax rate, then payroll, we take the payroll total multiplied on the payroll tax, then we will skip profit tax, we will move to asset. We will calculate profit tax a little bit later. Asset tax, when we will add loan payments. Asset tax, we will take this value and go to the timeline table where we have 0 or 1 of operating activity. So 0 means that we don't have operating activity, 1 means that we do have operating activity at this moment. And we'll link asset tax to the moment when we start operating activity. So now we are extrapolating these formulas to the right. And now we are moving to the first important line. It is the result of operating activity. So this is the first block of cash flow. So this will be revenues minus direct expenses minus payroll minus fixed expenses minus taxes. By the way, here we can just if we here see the losses, what we can do, we can quickly go to, for example, coefficients that we created and use these coefficients to see what will happen to the revenues, expenses if we adjust just coefficients, not the values of inputs itself. So now we're moving to investment stage. So here we have investment expenses that are put inside workplaces. Then we have investment expenses, general investment expenses. We are making totals of them. Then we create the next line the result from investment activity, result from. So I will take this line with an opposite sign, because investment in major cases that we are looking at the moment is an outflow. So this will look like this. Now we are moving to financing activity, equity. So this is, for example, the amount of money that we are investing, that we are putting from our pocket. This is our money. Then we are adding the loan. Then we are adding payments of principal payments, interest payments, then we calculate the result from financing activity. This will be equity plus loan minus principal payments minus interest payments. Then we are extrapolating this formula to the right. So here we can see the loan, here we can see the payments for this loan, and then we calculate the cash balance at the beginning of the period. And finally we calculate cash balance at the end of the period. So this will be the last line of cash flow. So we will calculate the cash balance at the beginning of the period will be this plus result from operating activity plus the result from investment activity plus the result of sorry guys. So here will be the 0 the first month, then cash balance at the end of the period will be this plus this plus this plus beginning balance. Then this we're going here, taking the beginning of the cash balance at the beginning of the period will be cash balance at the end of previous month. Then I will extrapolate this formula to the right, and then I will extrapolate both cells to the right, their formulas. And we're not done with profit tax. So if revenues minus this 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 and minus this will be less than 0, we will put here a 0. Otherwise we can do it like this. Otherwise we will take this base for the tax and multiply it on the tax rate, profit tax rate. And now we're closing brackets. Now we're extrapolating this formula to the right. And now we see how the tax has been calculated. Now we have our cash flow statement done, and the next video will be devoted to calculating the amount of financing that we need to start the business. So I hope you enjoyed this video. Maybe this video was useful for you. You may give us a like, subscribe, share this video with the friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.